Hey, roofers and HVAC business owners. So, if you're working in more than one state, there's something you need to know about your tax strategy. Because, while your crews are out crossing state lines for installs, repairs, or maintenance, your tax responsibilities cross those lines too, right? And if you're not handling it right, it could be cost you way more than you think. So, if you ever done a job across state lines, even just once, right, you need to pay attention because your tax strategy could be wide open to risk and you might not even know it. Hey, I'm Marika, and today I'm breaking down exactly what you need to have in place if you're working in more than one state. So, let's keep your business protected and profitable. So I specialize in tax strategies specifically for roofing and HVAC businesses, right? So whether it's storm work, cross-state installs, or just growing your service area, right? I've seen it all. And more importantly, I've seen what happens when when this piece gets missed. So I've seen contractors get blindsided with penalties, right? Back taxes, even audits, just because they didn't understand the tax rules in the states they were working in. So expanding your reach is great, but your tax game needs to expand with it. So point number one, right? You've got to understand nexus and tax risk. So nexus is just the legal connection between your business and the state. And one and once that connection is there, it can trigger income tax, sales tax, payroll tax, or all three, right? So it's the tax version of if you're working here, we want a piece. So here's what that looks like in real life, right? Let's say you're based in Texas and you landed $120,000 job in Louisiana, right? So Louisiana economic nexus threshold is $100,000. So just by doing that one job, you've crossed the line. So now, even though you're not right headquartered there, Louisiana could require you to file a state income tax return, right? And if you bring your crew across state lines, you might be responsible for withholding Louisiana payroll taxes too. So every state handles this differently, right? Some are strict, some are aggressive about enforcement. But if you don't know where you've triggered nexus, it's way too easy, right, to fall out of compliance. And that can lead to penalties, interest, or a surprise tax bill later. So know your exposure before it becomes a problem. So, point two, if you're working in multiple states, tracking travel and job costs gets more complicated, but it also opens the door to more deductions, right? So, the key is documenting everything the right way so the IRS, right, doesn't disallow those expenses. So, what can you actually deduct, right? So, things like fuel, hotels, crew meals, per diems, even equipment rental or mileage, but here's the catch, it only counts if it's properly documented, right? So, if you're just guessing or rounding numbers, you're setting yourself up for a problem if you're ever audited. So here's how to do it right, right? So keep all receipts, right? Log your miles, break out job related expenses in your accounting system. So that means setting up categories of job codes for fuel, meals, right? Lodging, equipment, and tracking them by state. So if you're using QuickBooks or something like Builder Trend, right, make sure your chart of accounts is structured to track everything cleanly. So that way your deductions are audit proof and your accountant's not stuck guessing. And here's a bonus tip, right? Tools and equipment you use on the road, you can often expense or depreciate them, right? Just make sure it's logged as business use and not mixed with personal, right? So these little things makes, a big difference when tax time rolls around. So now for the big question, when do you actually need to register or file in another state? So this is where, most contractors get caught off guard because just because you're, not headquartered in a state doesn't mean you don't owe them taxes. So here's the rule of thumb. If you're doing repeated or long term work in a state, or if you're bringing your crew and equipment, there's a good chance, right, you need to register and file. For example, let's say you're based in Texas, but you do multiple jobs in Louisiana, and those total over $100,000 for the year, right? You've likely crossed Louisiana's nexus threshold. So that means now you need to file state income tax there, right? Ignoring it doesn't make it go away, right? It just delays the penalties, and those can really start to add up. So here's why this really matters, right? So ignoring it could cost you thousands in penalties and interest, but doing it right, it keeps your books clean, right? Keeps you compliant, and could even open state specific deductions or tax credits, right? You didn't even know exist. So the sooner you handle it, the better your business will be for it. So this question came in from a North Carolina roofing business owner, right? I've done a few jobs in South Carolina, but I've never registered or filed anything there. Should I be worried? And honestly, this is more common than you think. So first, I would say don't panic, right? But definitely don't ignore it, right? So start by reviewing how many jobs you did in South Carolina, how much revenue like they brought in, and if you had crew or equipment working in that state. So if you crossed their economic right nexus threshold or had physical presence, you may need to register and file retroactively. So the good news is if you catch it early, right, it can get you ahead of it before the penalties start to hit, right? And I can help you work through the process, clean it up, and make sure you're good to go. So, if you're operating in more than one state, your tax strategy has to grow with your business, right? So, this is not something to figure out later, right? Because by the time you're filing taxes, it's already too late. You're just reacting now. So, you're stuck trying to clean up records that should have been tracked throughout the year, right? And your accountant, right, they're stuck digging through messy data instead of helping you make smart moves. So, planning early gives you control, right? Waiting until tax time. Causes stress. And waiting until tax season causes stress. And if you want to go even deeper, check out my latest blog, Ignore 99% of Tax Rules. Just use these three to lower your multi state tax bill, right? So I break down what actually triggers state tax exposure, the three areas you need to focus on, and how to stay compliant without drowning in tax complexity. So go ahead and read it. It's packed with clarity. And if you're not sure where your tax exposure is, or if you're already operating in more than one state but haven't filed anything, don't wait, right? Book my free profit and tax analysis at my website, right? I'll help you figure out what you're missing before the IRS and state agencies do. I'm Marika helping I'm Marika, helping roofing and HVAC business owners build tax strategies that grow with them, not against them. Thanks for watching, and I'll see you in the next video. Bye.